at Hindenburg Research have targeted another stock. And those familiar with Hindenburg know that just like Citron, when they talk about a particular stock that is mentioned by either Citron or Hindenburg, it's not for good reason. It's for bad reasons. Yeah. And I think that right now, Axos Financial, obviously in their crosshairs, this was a $3 billion plus market cap company. But now they're saying that their analysis says there are significant risks in this company. And so they have been shorting it, and they have been profiting ever since they announced this today, Mark.
Yeah, listen, this Hindenburg, aptly named, right, for the rigid airship that went down in flames. You remember people screaming, "Oh, the humanity." Well, Axos investors today are probably also screaming, "Oh, the humanity." When these guys go after a name, they go for the jugular. They're not always right, but they are often right. You'll remember they went famously after Carl Icahn, lots of other big names. And look, essentially what they're saying here is they conducted interviews with over 20 former employees, essentially saying, one, that their risk management procedures as it relates to what goes onto their balance sheet and their loan book were lacking, and I'm putting that politely, and that they have assets on their books that are not as advertised. So we're going to see, obviously, Axos, one of the leaders in digital banking, peer-to-peer banking, things of that nature. We've liked that name for a variety of different reasons. I have not had the chance yet, John. I was on a plane myself this morning to pour through the Axos report, to pour through Hindenburg's report on Axos, but I'm going to take the time to do it and see. Sometimes with these guys, where there's smoke, there's fire.
Yeah, they do their research. And again, just like our friends over at Citron Research, I think you want to be careful when treading in any of the stocks that they mention, at least for a couple days, because usually as word spreads, the stock drops.